Bitcoin is once again so boring. So boring. Actually, Bitcoin is never really boring, but the trading data right now is showing that the crowd is definitely not here. We are definitely in a malaise period for the market. So I want to dive into that a little bit, talking about some of the on-chain things that we're seeing, talking about some of the sentiment that we're seeing in the market. Also, a major DeFi hack has just happened with one of the most critical DeFi infrastructure players. Break that story a bit down for you as well. Also, I want to dive into the big narratives that are making money right now, because as we've seen throughout this year, what has been making money has been hitting the narratives early and cashing out before the narratives dry up. And we've seen that play out a lot this year with meme coins and all kinds of different things throughout the year. Well, we have some new narratives that are definitely worth keeping an eye on. Some that I think are narratives that have been here for a little while as well, but are developing. So I'm going to be diving into all that with you in this stream. So welcome, of course, to the conversation. Super excited to have you here to engage in a great conversation on crypto. So let's go ahead and get it. What I want to dive into first, this is really the big thing that's been going on in the crypto markets recently, and that is the utter lack of volatility. Aside from some coins on chain doing crazy gains and so on and so forth, the big stuff has been pretty quiet recently, and there's been all this big news, but the big news hasn't really been moving the markets that much, which is in of itself a bit problematic when we see so much big news coming through and it's not really pushing markets that much higher. It's not the best to see. And I think we're seeing a lot of that being reflected right now in the charts. So let's take a quick look at the charts here. This is the 1 minute charts on Binance for Bitcoin. And I put 5 green arrows here. This is only over a couple hour time frame, but there are multiple periods where basically Bitcoin is essentially doing literally nothing on Binance, the biggest exchange in the world. You'll have a 5-10 minute period where Bitcoin doesn't move by more than $1. Almost no Bitcoin is trading hands. It's pretty wild to see. The entire market is like neutral right now. If you look at the Bitcoin Fear and Greed Index, well, we've basically been neutral for a long time. Now, last month, technically, we were at 56, which is the beginning of greed, although 56 is really pretty much neutral too. Anything between 40 and 60 is essentially the market not being able to make up its damn mind. 52, 54, 50, these readings of basically sentiment just being cut right down the damn middle have been so prevalent recently in the market. And it really just exemplifies what the market is feeling right now. We're in this sentiment-wise, in this area where essentially nobody really knows what to make of anything. Yeah, we have Bitcoin ETF applications going in. Will the SEC do it? Will they not do it? Nobody knows. We don't have definitive actions to take here. People are concerned about the regulatory overreach. Okay, XRP and Ripple, they won their case against the SEC. Great news, but we still have 20 other altcoins that could be coming under a lot of scrutiny. So on and so forth. So we have this moment in the market where the true believers, people probably showing up to these conversations, we are continuing to stack our coins diligently, accumulate throughout the bear market or the early stages of the bull market, if you want to call it that. Whereas a lot of money, it's just not here. It's all chasing equity stocks right now. It's chasing NVIDIA higher. It's aping into $3 trillion market cap Apple with a 0.5% dividend. Come on, guys. Come on. The amount of money it would take to double the market cap of Apple's insanity. And people keep aping in. Just buy Bitcoin. Just buy Bitcoin. Come on. Come on, guys. Come on. What are you doing, market? I tell you. Now, before we dive into some more of this interesting Bitcoin data, I did want to make a quick, announcement for everyone. And of course, just a reminder, I guess, about the craziness of on-chain realities for crypto. So Curve Finance was exploited, putting $100 million of the crypto at risk. A huge amount of CRV tokens were taken out. And look, it's already happened. So there's no point in rushing out to try to do something. The money has been already siphoned off. The Curve team's already reacted, et cetera, et cetera. But the thing that I think is just such a key reminder is using DeFi you are a pioneer, even for the platforms that we consider to be like the quote unquote safe options. Curve Finance is a big protocol. It's a quote unquote safe one. Aave and MakerDAO and et cetera, et cetera. Shit happens and money disappears real fast in the crypto space. So always keep that in mind, that anytime you're using any of these protocols, all of your money can disappear in a hack in an instant. Now, in this situation, we did see some white hat hackers come in. They saw the exploit going on. They came in, they saved some user funds, et cetera, et cetera. We'll see how it plays out with the hacker itself. Maybe they get their hacker to return some money. Maybe they find out who the hacker was. We'll see. We'll see. These things can take a few weeks to get some resolution to. But Curve getting hacked, definitely not great. I mean, Curve is a major DeFi protocol. Like anytime, so much money and liquidity gets routed through Curve Finance because of their ability to give you large quantities of similar assets. So Curve Finance, in case you don't know, they do stable swaps. So if you want to swap between a different kind of Ethereum, so you have Lido staked Ethereum, want to get some Rocket Pool Ethereum. Well, Curve Finance is a great place to do that because they'll do it with very low slippage. You want to go from DAI stablecoins to USDT and then over to USDC a week later. Well, again, Curve's probably the place to do that. So we'll see how this plays out. But yeah, just a general warning that DeFi is still a Wild West area. And obviously there's great rewards by playing around in DeFi, but there's also great risks. So do keep that in mind. Gives you that feeling, though, with so much happening in the market over the weekend, and yet so little volume, so little interest in the majors right now. But you can take a day off crypto, you come back, and Curve Finance has been exploited, and stable coins are going crazy, and people are bridging money over to Coinbase's base layer 2 network and making crazy money on random meme coins, because that's the kind of market that we are in right now. People, I feel like there's so much money just rotating around between the same players right now because there's no massive influx of new people. Now, there's a lot of people here. This is a dramatically different market compared to the previous market cycle. Right? If you were here in 2019, man, today is nothing like 2019. 2023, there are so many more people and they're actually showing up and using stuff on chain, and it's very exciting. It's a very exciting time to be involved in crypto. That being said, we are still in a very much sentiment-wise neutral area. Now, before we break down some more interesting things going on in the Bitcoin space, if you are a trader, you need yourself an account over on BYBIT. It is the best place to do futures trading for Bitcoin, Ethereum, a wide range of other altcoins. They also have great spot markets. In fact, one of the biggest spot altcoin markets in the damn world. Plus, of course, their very popular copy trading service. And I'm going to use that link down below in the description. You can get up to $30,000 in deposit and trading bonuses, as well as exclusive fee discounts. If you're a trader, go ahead and check that out using the link in the description. Now let's talk about mainstream media shilling the old Bitcoin, man. I love it. Now this is CNBC. They've got news reports on the Bitcoin halving. It's a technical event called the halving, which typically marks the start of a bull run for Bitcoin. Yes, mainstream media. We know. But it's interesting to see mainstream media taking such a big turnaround. Of course, they do this. It's all manipulated. All mainstream media is owned by the big banks, BlackRock, all these guys. So when BlackRock wants to turn on the tap, they turn on the tap. And we've already covered how immediately after BlackRock launched their Bitcoin ETF bid, we saw a big change around in the media, with media suddenly saying, well, Bitcoin in the environment, everybody's getting it wrong. That was not what you were saying a month ago, mainstream media. But now the BlackRock says it's okay. Now that the masters have put in the phone call to your bosses, now the tune has changed. I think this could be the most telegraphed Bitcoin halving event in our history yet. Of course, it makes sense because we have more people, more attention, these giant financial firms, et cetera, et cetera. It will still probably be how a Bitcoin halving usually plays out. We get a bit of excitement running into the Bitcoin halving itself, and then a few months of probably not that much happening unless a Bitcoin ETF has just been approved or is about to be approved. And that's going to be a wild card and price action around that event. And then, of course, 4 months, 6 months after that, maybe we'll get a new all-time high. Not to say a new peak high. That's probably going to come 6 to 12 months after the initial high. But we'll crack back over that previous number. At least that's how it's worked out in some of our previous cycles. So we'll see if that's how it plays out again. But to see mainstream media on the shill train for the Bitcoin, I'm loving it. Bitcoin halving, by the way, 270 days away, which I know seems like such a long time. 270 days, man. A lot of wake ups, a lot of showers, a lot of taking the kids to school and all that stuff between now and then. I get it. I get it. We all want to get rich overnight. We all want to be the guy who apes into that meme coin and turns $500 into $1 million overnight. Happened over the weekend, actually, on the Coinbase layer 2 base. People were aping in meme coins over there. It's a different story for them, what we're talking about for the moment, though. But 270 days, that's going to mark the Bitcoin halving, depending on where the Bitcoin ETF falls within this. Now, currently, most of the Bitcoin ETF applications have a final deadline in March of 2024, which would coincide very interestingly with the Bitcoin halving, should they be approved then. We shall see, of course. But if you can take that perspective that, hey, 270 days away, Bitcoin halving, I'm going to prepare myself. I'm going to be accumulating. That's what I'm doing personally. Can't tell you guys what to do. Just share my journey as we go through this course. 270 days away, Bitcoin halving coming up. Accumulate until then. Bitcoin halving happens. Probably not that much exciting happening immediately after the Bitcoin halving. Then we run into our new cycle. So basically, I've got, let's say, 18 months, maybe 24 months before we see the next market peak happening. The peak, right? Not the new highs, the actual like peak highs for the next cycle. And then you sell. And then you sell. You run for the hills before the next bear market comes. But that's pretty crazy, because if you think about it, in the next 18 to 24 months, you can 10 to 50 to 100x your money, potentially, depending on what plays you're in, how it works out for you, when you make your entries, when you take your profits. Not getting chopped up, of course, which I think is a big challenge for a lot of people right now, to just simply not lose all your damn money during this year, 2023, because there's all these new things happening, and it's so easy just to get chopped up real fast trying to chase the next hype coin and 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 this new thing and that shiny new thing and this new layer 2, et cetera, et cetera. And look, there's a lot of opportunity in all that, but you got to have your timing right to play the narratives. But if you can just keep it simple, accumulate, wait, chances, I think, are on your side in that situation. Let's put it that way. Ecoin Metrics shared a great chart here. The fourth Bitcoin halving is going to be here faster than you think. Of course, this is a chart showing Bitcoin growth before the halving. So from the market bottom to before the halving. Now, usually there's not like a giant amount of price action before the Bitcoin halving, which is why I've been saying, look, my top prediction for the year is up to 48K. We'll see how that plays out. Of course, we're not there yet. Be nice to see it. But then post-halving is when things get pretty crazy, because from halving to total market peak, previous cycles, first cycle was 360x. That's not going to happen again for Bitcoin. Second cycle was 68x. That's not going to happen this cycle anyway for Bitcoin. Maybe some long way down the road. I don't know, but not right now. 8x in the last market cycle from the time of the Bitcoin halving until the market peak in late 2021. 8x, not bad. Not bad for Bitcoin. So how are we going to see it this time? Maybe we're going to go 5x, diminishing returns, right? The theory of diminishing returns. So maybe when the Bitcoin halving comes in, maybe we are at $30,000 still. How funny would that be? We're still at 30K, guys, in 270 days from now. Somehow I wouldn't feel that surprised by that happening. But okay, let's say it's 5x, 30K, that's up to 150K. Let's say it's 40K, right? That's 200K target. Maybe it's only a 4x return, though, from this cycle. Again, the idea of diminishing returns, we're going to get less and less out of each cycle as more money comes in. Essentially, the market caps get bigger and people seek out bigger returns elsewhere. Although then you get the flip side of Bitcoin ETFs coming in, which would be the wild card that breaks the cycle in terms of a diminishing return. Maybe we get a 10x return on our Bitcoin in this cycle, which would, of course, break the previous mold. So we'll have to see how it goes. Or maybe we get a higher price by the time of the Bitcoin halving. Maybe by the Bitcoin halving, we're up to 50K. And then it only goes up a 3 or 4x from there. So we keep up with our idea of diminishing returns from halving to market peak, just the price moves a bit further along. So we'll see. We shall see. Stock Money Lizard's great chart here. Mass adoption is unstoppable. Crypto ETFs are just one piece of the puzzle. Targets 2025, 150 to 200K. As we see the number of retail users continue to exponentially rise, which is probably one of the most interesting metrics that we can be looking at when it comes to Bitcoin. The fact that we see so many retail investors getting into Bitcoin throughout the entirety of the bear market. It's been very exciting to watch this playing out, where we see so much money coming in from just the little guys. And I love that, to see this happening, just to see regular users, people like you and me, just buying up Bitcoin. It's very exciting. Retail users, people between, $5 in Bitcoin up to an entire Bitcoin, they have been outstripping the new supply created by Bitcoin miners by 3 times per month. Just the small retail users. That's not your VCs. That's not your companies. That's not your millionaires, your billionaires, your family offices. That's not the coming ETF products, which, again, we've talked about the estimates here. They could be taking up $30 billion of new Bitcoin demand, which is approximately half of all Bitcoin currently sitting on exchanges at the current prices. Of course, if $30 billion tries to buy up all that Bitcoin, it's going to send the prices spiking up hard, of course. So all these things have to be factored in here. The ETF is a big, big wild card. So we'll see how, of course, that plays out. But right now we are at a time of intensely low volatility for the Bitcoin market, as, again, a great chart here from eCoin Metrics points out. First halving, second halving. So we can see as the halvings go through here where we kind of get in terms of how slow the volatility has really come down to. And right now we are at a very, very low volatility point in the market. So it's pretty interesting to see how quiet it has been in spite of all this good news. But it's just consistent, chill, mature, disciplined stacking. And that's kind of cool. People are just here showing up, putting their paychecks into Bitcoin. Big things are happening behind the scenes, but it hasn't sparked a retail mania yet. And the retail mania will be sparked. And you know when retail mania is going to be sparked? When BlackRock says they want it to be sparked. Because for all of our good intents and purposes and all that fun stuff, and it's nice to see mainstream media shilling Bitcoin. It's nice to see the Barbie actress Margot Robbie, she's talking about Bitcoin. That's all great stuff. But when BlackRock picks up the phone and they put in the call, that's when things are going to go crazy. And make no mistake, they own these companies. They own all the big media, the banks, BlackRock, they all own the big media. When they're ready, they will unleash the beast. Here, of course, though, again, Margot Robbie, she's the actress of the Barbie movie. She says her husband talks about Bitcoin and calls it Big Ken energy. All right, man. All right. I'll take everybody. I'll take all Bitcoin allies. Margot Robbie, welcome to the party. Barbie shilling Bitcoin, guys. Barbie shilling Bitcoin. What a time to be alive. I love it. You love it too. You know you do. That's awesome. Okay. Let's change tack a little bit here. Let us talk about altcoin narratives. Because if you want to make the money in 2023, and I know we all want to make the money in 2023, it's fun to wait until the Bitcoin halving. It's 270 days away. It's not that far away. And yeah, we're accumulating those long-term positions. And yeah, we are patient to wait our 2 years. It's only 2 years, is not that long, to see markets going crazy again. Hey, and like I said, maybe I'm wrong. And maybe the guys who've been calling for these new highs in 2023, maybe they're right. I hope they are. They're fantastic. I'm here for it. But until then, what has been proven to be making money throughout 2023 is by being a basically dialed in nerd, being willing to get your hands dirty and get on chain, because we have seen all these narratives running up through 2023, and almost everything has been happening on chain. If you want to make the money, you got to get on chain. So I want to dive into some of this with you because there's a lot of things that have been happening, and we've been talking about quite a bit of this. Some I've completely missed, like the Telegram bots narrative. I don't even know how big that's going to be, but that's pretty interesting. It really took off. We saw some pretty big returns coming in for some of those Telegram bots, but there are new narratives. People are making money. People are making big money. In fact, one guy, a couple guys, probably insiders. It's usually how it goes. But anyway, some people made like 40,000% returns on Bald. This is the new meme coin on the Coinbase base Ethereum layer 2. It's named Bald, of course, because Brian Armstrong, the CEO of Coinbase, is bald. We're getting really inventive here now, guys, with our meme coins. Yeah. Now let's talk about the layer 2 narrative. So Emperor Osmo shared this chart here. This was a massive spike in Ethereum fees that happened over the weekend. We saw Ethereum GUI costs go from about 20 GUI up to almost 400 GUI at the peak. Now, that means that if you want to do a swap on Uniswap at that time, you would have, instead of paying the $10 it usually costs, you might have had to pay $300 or $400. Maybe not quite that much, maybe only been $150 or something. But that's not good. We are still at a relatively quiet time for the market, as we've seen so much of the sentiment point out to us. And yet we still have these crazy gas fee spikes where we will see Ethereum gas fees go sky high, like a skyscraper. It's the Burj Khalifa. Or is it Burj Khalifa? Yeah. The big tower they got in Dubai there, man. That's what this looks like. Just a massive spike of the fees going crazy, super, super quick. And that is not great, because what happens when markets really take off? We will see fees go higher for longer and stay up there. Yeah. This is why Ethereum layer 2s are getting so much damn attention, because that is a real problem. Now, hey, as DeFi Dad points out, though, silver lining to that is that if we were to maintain such crazy high gas fees for a year, people would still use Ethereum. You think they won't? We did. For all of 2021, gas fees were absurd. The amount of times I went to Uniswap and had to pay $50 or $100 or more sometimes to do swaps on Uniswap, it's sickening. It's crazy, man. But we did it because you had to sell those coins sometimes, right? Or you had to buy those coins sometimes. But if we were to stay with such redonkulous gas fees, we would burn 10% of the Ethereum supply this year, thanks, of course, to the burn mechanism for Ethereum. So that would be pretty crazy. Not that we're going to do that, but it gives you some perspective of how crazy the gas fees have been. Now let's talk about Coinbase's base chain. This is the new big thing that everyone has been aping into over the weekend. A lot of people have been talking about, hey, here's an area where this could be a big money maker. So far, we've seen about $50 million worth of Ethereum make a one-way trip. It's currently a one-way trip into the Coinbase base chain. Interesting, because we're going to see a lot of that money, because it can't escape until later when Coinbase builds a bridge to get out. But a lot of that money is not going to be able to do very much for a while. But still, people are aping their money in. They're taking that one-way trip, and it's not surprising. Ethereum people are interested in making money, and of course, used to taking one-way trips. Remember, Ethereum staking was a one-way trip for a very long time. It took 18 months or something like that before you could unstake your coins. Was it longer? I think it was longer, actually. Pretty crazy stuff. 2 years, yeah. Staking your coins for an indefinite period of time, hoping at some point in the future you can unstake them. It's a big risk for a lot of people. And of course, we see early risk takers taking the risks here on the base chain. So we're seeing tens of millions of dollars flooding into the base layer 2. We are seeing shit coins pulling 40,000% overnight gains. The Bald coin. The new crypto casino is open, my friends, and people are already in there gambling away and making money, throwing money into basically every new thing that they can get their hands on, because they're There be gold in them thar hills, my friends. And a lot of people, of course, as is always the case in a new gold rush on a new chain, will lose everything. They're not going to find the golden nuggets. The people selling the picks and shovels, that'll be the bridge providers, that'll be Coinbase, that'll be the companies selling tokens, et cetera, et cetera. They're the ones that are going to definitely make a lot of money. Other people, some will hit it rich, a lot won't. But the upside risk reward ratio to getting early into some of this stuff is what keeps bringing people into these new chains. Look back at Arbitrum. When Arbitrum came out, some of the new ecosystem plays that launched in Arbitrum exclusives, they went insane. Tokens that came over from other networks to Arbitrum also saw massive user growth. So there is definitely money to be made chasing these narratives in these new layer 2 networks, but you have to be early. You don't want to be the late buyer. So that requires rolling your sleeves up, putting in the work, which is not always easy, but that's where the money gets made. Some other thoughts here for you. Yes, it's nice to hear a story about some guy who made 40,000% on a meme coin. That's probably not going to be you. This is the equivalent of winning the lottery in crypto. The guys who bought Pepe early, et cetera, a lot of the time, it's a group of insiders. They knew about the launch. Some other guys might have got lucky and got on board, but often we see this being the case. But remember, that's only a handful of people. 5 guys, 10 guys. Half of them could have been the same addresses owned by one person. Very, very few people made 40,000%. Now, a lot of people did make a lot of money, even if they got a little bit later into the party. But a word of warning, because it can be so easy to let FOMO take over when you see this happening, to let your rational brain just switch off and basically stop thinking. And just FOMO, and I've got to just FOMO into every coin launching on Coinbase's layer 2. I'm going to find the next bald meme coin. Bet more, risk more, degen more. That's what your monkey brain, your lizard brain starts telling you when you see these kind of gains happening, literal overnight riches. I just want to let you know, there's always going to be the next big thing. So if you have missed it, just be patient. Watch out for the next big thing to come along, right? Find out how these other guys found out early, how you can find out early for the next things, because we've seen this play out multiple times this year. We had Pepe and all these other things that have made huge gains for early investors. There's been so many 10x, 100x, 1000x coins already this year, and they're out there. They're out there, but you got to put in the work to find them. So instead of trying to find something that's already gone crazy, well, find something that hasn't gone crazy yet. Find something people are just starting to chatter about. And of course, don't get chopped up. Don't get chopped up. Again, be patient. Be patient. The easy time in the market will come. Right now, we're still pretty much in hard mode for the cryptocurrency market. And I know it's really tempting to want to feel like you need to be doing something all the time. I have to fight those urges on myself from time to time and say, hey, you know what? I don't need to always be doing something. Sometimes just the boring stuff is okay. In fact, investing is largely a boring thing. You don't need to be seeking excitement all the time. You want excitement? Go get on a roller coaster, man. Investing usually should be a bit boring. There can be exciting times you can pat yourself in the back and go, man, I really got that one good. But for the most part, it's not that exciting. You're going to want to be more restrained with how you approach the markets. Let things be a bit boring for you. Don't get chopped up trying to chase the hype, chasing green candles. When everybody on your social media timeline is talking about a coin, it's usually too late. Just keep that in mind. I did want to expand out, though, on the idea of the layer 2 thesis, because it's something we've been talking about a bit, something I'll continue to talk about as I see it continue to be a relevant narrative. Seraphim here pointed out that Binance users went over to the BNB chain. Coinbase users could go over to the base layer 2. Remember, Coinbase got 100 million people signed up with accounts. Huge deal. Huge deal. BYBIT users could all go and ape into the Mantle network. Of course, we've covered the Mantle network a few times here on the channel. MetaMask users, well, maybe they're all going to ape into the Linea network. These are all, new layer 2s in case you're not familiar with Base or Mantle or Linea. They're all the big new things in the layer 2 space. I think early movers in a lot of these spaces, the new DEXs, the new money markets, whatever it'll be on these chains, interesting places to look. More on that in just a second. But Seraphim, as points out here, the recurring theme of weaponizing your CeFi user base to increase revenues via sequencer fees, convincing your users that they need to be paying gas for the same apps that they're already using for free is the ultimate benign psyop. Okay, I dig it. But it definitely, if we look at people getting into these new chains, the user bases of these exchanges or products, if we talk about MetaMask, is insane. We are talking about very, very big numbers here. Hundreds of millions of people between all these exchanges that are going to get access to these new layer 2 networks. So it's pretty gosh darn cool. Now, I talked about the layer 2 trade thesis on a recent stream as well as in the newsletter recently. So just to share a few highlights from what I wrote in the newsletter here. Layer 1 trades were the big thing in 2017. Again, in 2021, 2017 saw coins like EOS, Neo, Icon, and others moon like crazy. 2021 saw some big new players like Solana and Avalanche actually come in and capture market share. These have much stronger chance to create staying power because they already have users, right? Others like Moonbeam, Sui, Aptos have not really seen a bull run, and I'm sure some of them will manage to attract liquidity and hype. But one thing bouncing around my mind recently has been the layer 2 trade. This is the idea that Ethereum layer 2s might just be the place to be for this cycle. So there are 3 ways that as an investor, you can try to capitalize on this. The first is to farm for airdrops. So look for chains that have not launched tokens yet. Now, Base, the Coinbase layer 2, they have said they're not launching a token. But you never know. That could just be what they're saying right now because of the regulatory scene. They may, in 6 months or a year, 18 months, launch a retroactive airdrop. That's a possibility. They've said they're not going to have one, but there's others who have said they were not going to have one and they had one. So if you're using Base, hey, there's a potential you might get an airdrop in the future. Let's just assume not, but you never know. You might be surprised one day. ZK Sync, it's another big one. They're going to do an airdrop. Linea, they're going to do an airdrop. So by actually using these layer 2 networks, being early adopters and using the money markets and doing swaps on the exchanges and stuff like that, bridging money over, you potentially position yourself for an airdrop that could be worth thousands of dollars. So you can take $100 or $200, bridge it over, play around, swap stuff back and forth, have a good time, try out some different apps, and you might be up for an airdrop for the main chain. It's worth a shot. Look how much money some of these past airdrops have made. And what's even more interesting is that we have tokenless protocols. So for example, ZK Sync's Sync Swap. Maybe they're going to do an airdrop to people in the future, right? They want people to come in. They want people to bring their liquidity. They want people to start using their products. And when you do that, you stand the chance to get potentially multiple rewards in the future. So let's imagine that as an example, you're using ZK Sync and you're doing trades on SyncSwap. You're providing liquidity on SyncSwap. You're also using, I think, is it Mute.io? Pretty sure it's another ZK Sync-based decentralized exchange. You're using that one too. And let's say in the future, you're positioning yourself for 3 airdrops. You get the ZK Sync airdrop. You get the SyncSwap airdrop. You get the Mute airdrop. None of those may do airdrops. Maybe all of them do. That's the airdrop game. You never really know, but you can position yourself in case they do. And the upside potential for positioning yourself for that is massive. So that's one way to play it. The second is good old-fashioned spot buys on these ecosystem coins. So I've been buying a lot of the Arbitrum token. Now, I don't love the Arbitrum token from the sense that it doesn't really have any value capture. It's a governance token. And it is a bit of a gamble, I feel, in that sense. That can change in the future. Maybe we'll see more money markets bringing more value to the ARB token, for example. We'll see. Others like Mantle, interesting. I'm going to keep an eye on that. I may get a Mantle position at some point. I don't have one yet. We'll see how that goes. I may or may not make an entry in that at some point in the future. If Base ever did a token, that would be very attractive, I think. I own Coinbase stocks. I think Coinbase stocks still could have a 10x potential. I'm holding my bag for a while for the Coinbase stocks, but I will plan on taking complete profits on my Coinbase stocks during the next market cycle. And then, of course, there is the small ecosystem plays. Now, Arbitrum proved the relevance of this thesis, but basically it is this, that new launches on these layer 2 networks have big upside potential. So if you look at some of Arbitrum's earlier movers, like Radiant Capital, right? Radiant Capital went from 2 cents to 35 cents or something like that. It went crazy, went absolutely crazy. And of course, there are huge farming opportunities for early users as well. Others, Grail, a decentralized exchange on Arbitrum, huge gains. I don't remember the exact numbers, but huge gains were had by early Grail buyers. I highly suspect you're going to see a very similar situation play out. I'm watching Coinbase's Base. I'm watching Consensus's Linea. I'm watching BYBIT's Mantle, and I'm watching ZK Sync. There are other layer 2s. You can't watch all of them. Even just watching those ones for me like boggles my mind, and I'm going to miss a lot of stuff. But if I can catch even a couple of, these smaller caps as they launch in the earlier days and maybe get, a couple grand into some of these, like you might get a 10x return on some of these early ecosystem plays. You might get more. So this is where I think we're going to see some of that narrative money being made in the layer 2 space moving forward. And of course, if you're not signed up for the newsletter yet, where I shared those thoughts, and we share lots of other thoughts, whether it be on DeFi, whether it be on altcoins, new narratives, news, airdrops, we're talking about airdrops all the time, much, much more technical analysis, all that fun kind of stuff, then you got to get signed up to the Wealth Mastery newsletter. 75,000 readers a week are enjoying this newsletter coming straight to their inbox for free. Yes, it's for free. So go ahead and check it out. You got nothing to lose. So check out the Wealth Mastery newsletter. It is the best crypto newsletter out there with the most alpha by far. So check it out. Link in the description. Or just go over to thewealthmastery.io. Check it out there too. Now let's talk about the other big narrative here. Trading bots. This is one I completely missed, but we're going to talk about it. It may even be late in the trading bot game. Maybe it's early in the trading bot game. Hard to say. Maybe I'm mid-curving trading bots. I don't know. But trading bots such as Unibot are taking over messaging platform Telegram, allowing retail crypto investors to gain entry into DeFi in the hopes of cashing in on the altcoin-fueled market rally. That's from Bloomberg. So mainstream media has already picked up on the trading bot narrative. So Unibot did like 100x, the Unibot token. But we don't really see the users showing up en masse to the trading bot narrative. So as Crypto and Black points out here, trading bots, Telegram bots, the hot new narrative. Telegram has 700 million monthly active users, and 2 bots have already entered into the top 10 revenue in all of DeFi. And they've done that with very few relative users. We're still talking like niche stuff here, right? So if these trading bots really take off, these Telegram bots really take off in a big way, there's a lot of upside potential considering how active the crypto community is over on Telegram. Like all the major projects have Telegrams. Telegram groups share a lot of alpha, et cetera, et cetera, et cetera. There you go. But it's also, I think, a good example with the whole bot narrative. Man, you just can't keep up with everything. Like the bot thing, right over my head. Totally missed it. Potential for it to be really big, potential for it to also be the end of it, or to find the hype already drying up. It's hard to say how big this is. I mean, this isn't the same kind of hype narrative, I feel anyway, my personal opinion, that we saw with like 2020's DeFi summer, where we had super crazy gains and lots of capital and generally a pretty optimistic market condition overall. I think right now things are a bit different. That doesn't mean that Telegram bots can't make a truckload of money. If you have good tokenomics with good rev share, makes it interesting, right? I love those tokens that share revenue from the actual product. And if the product's popular, if it can gain users, gain traction, et cetera, great. We're also going to see, of course, and I think we're already starting to see, as is so often with any narrative that happens in crypto, copy pasta projects, new stuff popping up that's essentially garbage, is never going to get any users, just going to be a quick pump and dump by the team or influencers or whatever it might be. So be careful of that too. There's going to be a lot of that in these narrative trends. So if you miss the boat, that's what these kind of new projects pop up for. Oh, you missed Unibot and it's 100x. Well, here's a bunch of other shit coins you can buy that are kind of like that, but not that. I don't know very much about Unibot. I'm certainly not a endorsement to go out and buy it or anything like that. Obviously, none of this is financial advice. This is just a dude on the internet sharing his thoughts on narratives in the crypto industry. But it's pretty interesting to see how fast these narratives move and how big the gains potential are. Because again, Unibot was like 100x this year. There you go. All you had to do was be a nerd who believed in the potential for Telegram crypto bots to be the next big thing. And people believed in that. And they made money on that. I dig it. Good for you. Good for you. Again, I celebrate when anyone's making money in this space. It's hard to make money in crypto in this current season. Look, in 2020, late 2024, early 2025, when people are making money in crypto, I was like, yeah, I'm making money in crypto. I wasn't making money in crypto right now. You making money in crypto right now? That takes a bit of edge. Takes a bit of paying attention. Takes taking some risks, right? When everything's pumping by 30% overnight in crazy mania season, everyone can make money real quick. Right now, though, if you're making money, you got edge, you're looking for edge, you're putting in the work, you're farming those airdrops, you're getting in early, you're in Telegram groups, you're in Discord groups, you're finding early opportunities, you're aping, you're taking big risks. It requires a bit more edge right now to be making money. Definitely doable. It's proven every time we come out here and have a conversation. There's more examples of people who have made truckloads of money by being early to stuff in these early narratives in the market. The DeFi investor here pointing out about, of course, the liquid staking DeFi sector. So staking withdrawals are minimal for Ethereum right now. LSD finance, acid finance, man. Yeah. The stuff I did when I was a teenager, man, I tell you. Anyway, the LSD market, the liquid staking DeFi market, that is, friends, of course. Now the other stuff. Now this is a tiny market still, relatively, compared to the potential of it. So we saw 1.3 million Ethereum coins staked in the last 30 days. That's massive. So we see a lot of Ethereum coins that have not entered into liquid staking finance yet. And the potential is absolutely there, of course, for the early players in the space. Like Libra Finance, for example, don't own it. Maybe I'll buy it in the future. Don't know. We'll see. I felt like I should have armed it earlier. Maybe I mid-curved it too much. Regardless, but we see a lot of innovation happening. Libra Finance is a stable coin backed by liquid staked Ethereum. They have their V2 coming up soon. Certainly something to keep an eye on in this wider space. Stake-wise as well. Now they're actually proposing a partnership with Mantle, the layer 2 network backed by BYBIT. Mantle has 270,000 Ethereum. Yo, that's crazy. That's crazy. They are looking to make a partner to bring that liquidity into the Mantle network. So that's pretty potentially big, I think, for the entire liquid staking DeFi space, if we see that move forward. So pretty gosh darn interesting. And of course, real world assets, still a big damn deal, still something worth talking about. I know I mentioned the $50 million Avalanche Vista program, which is seeking to bring more tokenization on the Avalanche chain. But real world tokenization is going to be absolutely massive. As Misha points out here, by 2030, tokenization of real world assets will be a $16 trillion industry. It will entirely transform real estate, private equity, stocks, bonds, and most forms of investing. As she points out, the total tokenized market will be 10% of global GDP by 2030. It's based on current estimates. Of course, it could be higher, it could be much, much lower, depending on the regulatory scene. So don't get too caught up in predictions. So on the high end potential here, $68 trillion. And you got to remember who's shilling tokenization of real world assets. Freaking Larry Fink, man, the Blackrock dude. He is out here shilling away on real world assets, on the tokenization of all this stuff, equities and bonds and all this jazz on the blockchain. BlackRock getting into crypto is one of the most uncomfortably big events that's happened in crypto so far. And we already see a lot of asset tokenization happening on chain. For example, MakerDAO's got huge amounts of real world assets, right? They're buying treasury bills. And then, of course, once all this happens, well, you're going to need somewhere to trade these things. The guys from Trader Joe tweeting out the other day, if Avalanche is tokenizing everything, well, I guess there needs to be a decentralized exchange that can support real world assets. Is that another potential price catalyst I see coming from my Joe bag? Potentially. And I'm here for it. Trader Joe, get it, guys. Get it. Let's get this thing back up to new all-time highs. And of course, we have others too, like Chainlink, which stands to benefit from all this stuff by being the essential piece of software to connect all this stuff through the oracles, and of course, the new CCIP upgrade. And of course, it's interesting to see the price of Chainlink being so much in this just accumulation period ever since early 2022. And yet the on-chain activity from developers, absolutely crazy. We've seen huge development activity for Chainlink right through the bear market. And of course, the CCIP launch, even more attention on Chainlink these days. Keep watching the narratives. I'm going to keep watching the narratives. I'm going to keep you up to date on what is happening with the narratives as they develop in this space, because narratives make money. Hype makes money. We've seen it play out 100 times in crypto. We're going to see it play out 100 more times in crypto. Being early to narratives is how the money is made. Being late to narratives is how the money is lost. Now let's open up the floor. Let's do some Q&A. Let's do some questions. I'm going to hang out for another 10, 15 minutes here. Got some questions. Drop in the chat. I'm going to answer them for you as best as I can. As always, if your question is simply, Lark, what do you think about my altcoin? I may or may not have an opinion on that. Oftentimes I won't. I can't keep an eye on all altcoins. Far from it. It's a hell of a task just keeping an eye on the ones that I've got in my portfolio, let alone trying to keep a little bit of a taste on other major chains and what they're doing. Oh, where are we at? OG Contraband. Why is Optimism going up crazy? Well, the simple reason for that is that WorldCoin is running on Optimism. WorldCoin, of course, the new Orwellian social ID coin, which I'm just so torn about. Is WorldCoin like the greatest thing ever? We're going to bring digital IDs onto the blockchain. Can we trust Sam the Altman? We couldn't trust Sam the Bankman. No, couldn't trust him. He turned out to be a massive fraud. Sam the Altman, well, ChatGPT is pretty cool. I like that, although it's got a lot of political censorship with it. So we'll see. We'll see how their WorldCoin project goes out. But I'm reminded of Orwell's quote from 1984 that the future is, paraphrasing here, the future, imagine the future as a boot stepping on a human face over and over again. And then I realized that we're making that reality come true by giving away our retinal scans for shitcoins. What would Orwell think about all this? I don't know. Okay, what do we got here? Let's go for the next question. Oh, here we go. CJ Ventrilo. What do we think about a market where Blackrock ETF gets denied? I like that question. It's an interesting question because all we talk about is, of course, BlackRock's going to get their Bitcoin ETF approved. And of course, they're 575 or 475 to 1. They've only ever had one ETF denied out of 500 that they've put in. Maybe this is the second one. But if they get denied, I think they're going to get approved. Put that out there. If they get denied, I think the initial reaction to that's going to be pretty bad from the market. I think people will freak out a little bit because if BlackRock gets denied, it means no one else is getting approved either. And after so much hype around like, BlackRock's coming. No, BlackRock's not coming. And maybe BlackRock just says, well, it's too damn hard. We're just going to give up. Doesn't really seem like BlackRock's MO, to be honest. But hey, sure, maybe, why not? That being said, BlackRock is not here for the Bitcoin revolution. We do not need BlackRock. If anything, BlackRock is a threat to the Bitcoin revolution. Because what happens when BlackRock corners 10% of the supply, 20% of the supply? Because that's 10 or 20% of the supply that's no longer transacting on chain. It's It's locked up in BlackRock's vaults, and they issue out garbage paper contracts. That means a problem for the long-term on-chain security for Bitcoin if not enough people are fucking transacting on-chain, man. Letting the F-bomb slip out there. BlackRock just boils my blood. These guys. Anyway, that's problematic. So BlackRock's not here for us. BlackRock's not our friend. So if they get denied, it's actually a blessing in disguise, but I don't think they're going to get denied. BlackRock's coming for your coins, guys. Okay. Jacono78. Do you go live multiple times a day or upload the vid later? Jacono, basically my strategy, and you guys let me know what you think about this. I hope that it's useful for people who don't want to join and watch the entire hour live stream. But my idea has been, I do the live stream. Anybody who wants to come along, join that, or, put it on the background, listen to crypto, whatever, listen to that whole hour-long conversation. Awesome. I applaud you guys in your diligence and watching an hour stream. That's awesome. But I clip that down into smaller videos and repost it. Because let's say you don't really care about altcoins right now. You just want to hear about the Bitcoin news. Boom. Watch the 15-minute segment on Bitcoin. Let's say, hey, I'm looking for new narratives. I'm looking for new ways to make money in crypto. You just watch the crypto narrative section. I kind of try to break it down for you guys like that. So I hope it's useful seeing these clipped up. Basically, you can know if it's an hour-long video, that's my live stream. If it's like a 15-minute video, it's a clip of the main stuff. And of course, I'm doing interviews once in a while. I had a great interview with Raoul Powell recently. That was a lot of fun. I just had an interview with Mark Yusko, which is already up on the podcast. If you want to go listen to that now, we'll be posting here on YouTube in a few hours. So keep an eye out for that as well. Next question here. Lark, what do you think about the G20 being pushed towards crypto regulations or pushed crypto regulations? Okay, so regulations are coming. Regulations have always been coming. Some of the stuff we've been seeing pushed regulation-wise has been positive. A lot of it's been so-so, but at least it's some kind of regulatory clarity. We'll probably see a situation where Europe and the United States take a much more conservative view on regulation. We saw Europe, for example, taking a relatively conservative view to even a view that's slightly problematic in their regulations that they passed. We're going to have all these oversights for private wallets and stuff like that. It's real pain in the butt. The industry will find a way, but it adds a lot of complication for the companies working in this space. And then you'll see other countries, places like the UAE, Singapore, Hong Kong, who are going to innovate and allow for more freedom, for example. So we'll see a bit of regulatory arbitrage probably happening between some of the more conservative regulations that get passed in maybe the USA or the European Union. Maybe the UK will be more positive when they finally get their crypto bill out and try to attract more business onshore. That would be a clever thing for them to do. Maddie G, how much Rose and INJ should I own? I'm not going to tell you about those two specifically, but I think it's a very interesting question when it comes to how much of any coin should anybody own. Look, I can tell you personally, as a percentage of my crypto portfolio, just my crypto portfolio, I own, I think about 1% in Injective and 1.7, 1.8%, something like that in Rose. How much you should own? I have no idea because I'm not your personal financial advisor and I can't give you personalized financial advice. However, one thing to think about when you're thinking about building your portfolio is the risk to reward ratio, right? So if you're looking at, okay, well, what is the risk of holding Rose relative to my total portfolio? What is the risk of holding Injective relative to my total portfolio? Actually, I feel like I should probably have some more Injective and shouldn't have sold as much as I did back in the day. But, c'est la vie. C'est la vie. You sell what you sell when you sell it, and that's fine. And it was, in profit at the time, so it's not a big deal. But I think that in terms of how much you're going to own, it's really a very personal question based on your wider portfolio. It's... My portfolio, for example, 75% Bitcoin and Ethereum. It's very conservative. And by the end of the bull run, it's probably going to be 30% Bitcoin and maybe 25% Bitcoin and 10% Ethereum or something like that, simply because the altcoins will gain so much in comparison. And that's the part about altcoins, why I keep low percentages. Personally, maybe you want to take more risks with your portfolio, and that's up to you if you do. But altcoins, you can have a 1 or 2% allocation to a coin. If it does a 10 or a 20x move, whoa, those some outsized gains potentials. And of course, that is what we see the power of altcoins being. GT, Lark, how does big money keep Bitcoin in such a tight range so well? It's fascinating, isn't it? They're so good at playing the game. They're so good at playing the game, man. It's nuts. Yeah, I don't know. It's a fascinating thing to see how how tight the range has been for Bitcoin for basically 6 weeks now, which means volatility is coming. Prepare yourselves for the day when you wake up and you see Bitcoin down 10, 15, 20% or up 15, 20%. It can happen like that. So I would expect such a situation to potentially play out here as well. But yeah, it's been pretty crazy. Pretty crazy, man, if you ask me. Jason Ferriani, fresh cut. That's right, man. Finally went and got my haircut. Wife was bugging me about it. Finally had to do it. Yeah. Redox, any thoughts on Cardano DeFi and the TVL steadily building? Redox, I haven't actually personally played around with any Cardano DeFi stuff. I've been keeping an eye broadly on the scene. I've seen, of course, huge gains happening. So if you have been a Cardano believer, a Cardano early adopter of Cardano tokens, I mean, you've made money without a doubt. There's been a lot of early money makers, a lot of early opportunities to get involved there with decentralized exchanges. Basically goes right back to my layer 2 thesis, getting involved early, getting involved in those main infrastructure projects. They're going to be like your decentralized exchanges and stuff like that. Big potential opportunity. Cardano total value locked. If I remember right, we've gone up 300% this year, which is from like 50 million to $200 million. That's a baby by comparison to the bigger networks. Cardano's got a lot of distance to cover. And I think Cardano's got a big community that can help it cover that distance. We need to see more stable coins coming in. We need like USDC natively on the Cardano blockchain. I think that will help. I think if we start seeing more centralized exchange adoption, that's going to help as well. So don't count Cardano out. They've got a huge community, man. Huge community of people who absolutely love Cardano. So yeah, keep an eye on the DeFi scene there if you are a Cardano believer, because there's been some serious money made on the early tokens in that space. Okay, last one for today. This one from DGen Dad here. Can you talk about the crypto bills that have passed and do they have further to go? If you're referencing the one in the States, so it passed through the Senate, but it still has to go through the House of Representatives. So we'll see if that actually gets anywhere. My thought about any bills in the USA in particular, and look, there's been a lot of crypto regulation around the world. The UK, very interesting. I think they have a potential to do something really, really big. They've said they want to do something really big. They said they want the UK to be the leader in global crypto. Hong Kong, of course, and their crypto bills, very big. But I assume you're talking about the US one because that's the one that everyone's talking about for the past few days. So if we talk about the US crypto bill, it's only gone through the Senate. It's still have to go through the House of Representatives. And I wonder if we're even going to see that reach the president's desk. And if it does, come on, man, Biden's probably going to veto that. I think this White House has been super anti-crypto. They've projected that out. They've started Operation Choke Point 2.0, which is seeking to basically crush crypto from behind. And so to see them take a further step and to totally crush it, I would not be surprised at all. So, I don't think Biden's going to pass a bill that comes across his desk. I think you need a new president to see positive crypto bills actually make it through into law in the USA. I could be wrong, but that's my thought. Anyway, thanks for coming to the stream, guys. I appreciate everyone's time and the questions and just hanging out. So it's been good. I love hanging out with you guys. So thank you so much for coming out and talking about crypto with me. And I'll see you next time.